Hello there, traders. Welcome to today's live stream. My name is Jonathan Kibbler, Senior Market Analyst at 𝖢𝖥𝖣yi. It is the 7th of January. Already a week gone in the new year. Welcome to the live stream. As usual, we're going to be going over some key data points today. We're going to be going over some fundamental drivers of this week. It is actually quite a big week. We've got NFP this week, so we're going to be discussing NFP, how the dollar is performing at the moment, how do we see the dollar performing in the future. There's lots to talk about on that front. We've also got some interesting commitment to trader report data that I'm going to take you through. I'm also going to go through some seasonal bits as well that I'm looking for going into this trading week, and obviously we'll go through the currency strength from here as well, so we'll have a little look at that as well. But first of all, let me know how everybody is. Happy New Year to everybody. Hope everybody is well. Hey Bongo, hope you're doing well. Happy New Year to you. Happy New Year to you as well, Royston. Here's to a successful 2025. I'll cheers to that, mate. I'll cheers to that. Hoping everybody in here is going to have a successful year, whether that be financially, whether that be through learning. Yeah, looking forward to the cut and currency strength meter. Yeah, I'll get onto that fairly quickly. I'm going to go through some key data first because you know what we're about on the channel. We want to look at those fundamental drivers in the market, and then we're going to go through some of the key points or the key markets that I'm taking a look at going into this week, and then we're going to take a look at markets made clear. Actually, had a few upgrades. Ray emailed me and said there's a few upgrades to check out, so we're going to check out some upgrades as well while I'm on the live stream. So hopefully you'll be interested in that too. Happy New Year to you, Ratish, as well. Happy New Year to you as well, Nguenya. I hope I've said that correctly. Happy New Year to you. Yeah, we'll do Bitcoin as well. There's a lot of interesting stuff going on at the moment. Let me get rid of that coffee there. Good afternoon, Vincent. Happy New Year to you as well, bud. So let's start off with some fundamental drivers in the market because there is some big data points. Let me just grab my pencil. So what I'm going to do as well is we're going to zoom in a little bit here so that we can all see these a little bit clearer. So we've already had some data. We've already had a little bit of good data out this week. Interesting data as well. German CPI actually jumped a lot higher than the previous. We were at minus 0.2%. So we actually have seen a little bit of that euro strength coming in. This was something that we discussed in December because usually there's a seasonal play that's quite strong for euro in December. We didn't have it. The fundamentals at the moment that are driving the US dollar strength and ultimately driving the euro weakness is still there. There's still a sustained move in that. So we're not really seeing the euro uplift of what I was anticipating. We are against weaker currencies, but not necessarily against the US dollar. Some services PMI out of the US. What was quite interesting to me today was the Swiss franc CPI coming in at minus 0.1%. So we're getting a bit of deflation in Switzerland. We are starting to see that Swiss franc weakness starting to come through into the markets, which is something that the Swiss National Bank was ultimately looking for. Construction PMI in the UK came in a little bit lower, but still above 50, so that's still expansionary. Other than that, for Tuesday, we've still got a little bit more to go. We've got ISM services PMI coming up at 3 p.m. and job openings. We've got some Canada data as well. Now, obviously, CAD's actually going through quite an interesting transition at the moment because we've just seen Justin Trudeau resign as Prime Minister in Canada. So they're going to go through a little bit of a sort of political turnaround there. And sometimes political unrest could be bearish currency. But in the terms of CAD, I'm actually looking for a bit of a reversal there as well. So we're going to take a little bit more of a deeper dive into CAD. Going into Wednesday this week, then there is really important data coming up on Wednesday. A couple of key points to keep your eyes on. Australia CPI year on year expected to expand to 2.2%. Now remember, the RBA are one of the only central banks that have not cut interest rates still. Okay, so that's something to kind of note. Australian dollar has been weaker basically because of the poor performance in China. So that's having a real knock-on effect in Australia. So we're not really seeing any kind of sort of the growth that you would typically see if you were looking to back a sort of central bank that was not cutting interest rates. So the RBA is still holding interest rates for now. Non-farm employment change coming out, or ADP non-farm employment change coming out on Wednesday as well. I'm not really bothered about that one. Unemployment claims is going to be something we need to keep our eyes on. Really speaking, it's going to be the FOMC meeting minutes that could be a driver of the markets going into Wednesday. This is 7 p.m. GMT for me. That basically is the sort of why they decided to cut interest rates in December, but we know at the moment that they're likely to hold interest rates in January, and we'll go take a look at the CME Fed Watch Tool as well. Then before the stream on Thursday, we've actually got a little bit of a turnaround here as well. You've got retail sales, so that's all down to consumer spending. What are Australians doing? Are they buying? Are they active in the retail space? You can see that we are forecast to see that grow, but also China data as well. Can we start to see a little bit of an uplift in this? This is what I'm going to be looking at going into the new year. Harmy, happy new year to you as well. So yeah, let me know what markets you're focusing on this week. I know that some of you do dabble with the currency strength meter and doing your own version of the currency strength meter. So let me know what kind of numbers you've got going on this week. This is what I'm looking at. Now, there wasn't too much in the way of change. If we just actually go to the main sort of currency strength meter here, that's the wrong one. This one over here, we can see that there's not been too much in the way of change. Some things that I quite like to see at the moment. First of all, Kiwi, right? And I'm going to expand on why I'm a buyer of the New Zealand dollar. Well, haven't actually bought anything yet, but actively looking. First thing is, you can see that it was a weak currency. Okay, it was one of the weakest, and we are starting to see a comeback in that. So this is, to me, is in that kind of reversal zone, and that we are starting to see that strength coming back into the market. Now, we compare that with other things as well, including the commitment of trade reports, which we'll touch on shortly. But yes, New Zealand dollar is something that I'm kind of looking at as a potential reversal currency. US dollar is the strongest currency at the moment. So we can all tell that from the currency strength meter. Pretty much since September, we've seen that kind of continuation in the strength there. So commodity currencies are starting to make a little bit of a comeback as well. If I just actually highlight to you the Australian dollar, which is actually this grey line, which can be a little bit hard to see, but you can see here it's actually stepping higher as well. So you've got Aussie stepping higher, Kiwi stepping higher, and then you've got this green one, which is the Canadian dollar, also stepping higher as well. So a lot of commodity currencies starting to gain traction against a few other currencies. Mainly those currencies that are starting to peel off to the downside are the euro and the pound, obviously weaker currencies at the moment, and also the Swiss franc. So that's where you can see the commodity currencies really kind of gaining at the moment. So I like the idea of being a buyer of Kiwi at the minute. And if we just go and flip back over to the currency strength meter, have a little look at the changes on the week, we can see that euro still underperforming right now. It went from 3 to 1 last week. Pound really struggled, 4 to -1. So I had pound losing significant ground last week. Australian dollar, New Zealand dollar were in those reversal zones, starting to give a little bit back now. Dollar in the reversal zone, but very bullish. CAD starting to get stronger too. And, you know, this is quite a nice story actually, because if we think about what the Canadian dollar is correlated to, it's correlated to oil prices. What have we seen in oil recently? Oil has started to break out of its range to the upside. That could also help boost commodity currency prices. Swiss franc, one of the worst performing currencies of last week as well, and the Japanese yen starting to get a bit stronger. Now, Japanese yen is a very interesting story to me right now. I feel like the yen is mispriced, but we'll discuss that going forward. So just kind of looking at currency pairs to focus on this week. This was my list of the currency pairs that I wanted to take a look at. out of that list, there's not too much in the way of opportunity, I feel. So one currency pair that I like the look of, or a couple of currency pairs that I like the look of still, euro dollar downside, pound dollar downside. The only problem I've got with euro is the fact that we've got a bullish commitment of trader signal on that right now. So I don't really want to fight the euro at the moment. The New Zealand dollar I quite like the look of, but it's not printed a reversal signal yet. Dollar CAD as well is not printed a reversal signal yet. And actually, dollar CAD is suggesting that we continue to buy that market according to my currency strength meter. And dollar Swiss also is a market that I pretty much like the look of. Going down the sort of rankings then, so euro yen is the only kind of market that give me a good score in here, as well as sort of your pound Aussie and your pound CADs. So yeah, in terms of kind of trying to trade something at the moment, it's still in that kind of murky water. I have taken a position in the market. I'm actually silver long right now. And again, I'm going to show you kind of why I'm silver long very, very shortly. But that is my only trade of the year so far, is silver. And I'm currently looking at a dollar Swiss long position as well. So that's kind of my mini watch list for the week. And we're going to kind of continue to refer back to the currency strength meter, and we're going to continue to kind of highlight what I'm looking for in terms of that. As always, guys, let me know what markets you want to take a look at, but this from my watch list is what I'm looking at right now. Let's go take a look at what's going on in terms of commitment of trader report data then. So first of all, nice little bit of an update here to Markets Made Clear. They've actually added a little bit of a filter, which is something I think I've discussed in the past. It'd be nice to have a little look at some kind of optimal signal. So here there's a little option now that you can click optimal, and it gives you sort of the markets that are holding a strong correlation with this year's price and the previous years. Now, obviously, very difficult to tell if we are following a similar pattern to this year right now because we're 7 days in. But for instance, a good little feature here is we can kind of like turn to something like the indexes, and we can see that on the 15th of January, there's a 75% correlation with the volatility index, for instance. We can click on that, go into this, and we can see that usually around that sort of January 15th period to February 5th, we see a little bit of an uptick in the volatility index. So that's something to take note of, because if we see a rise in the VIX futures, what does that mean? It means that stock markets are likely to fall, and we're likely to see sort of safe haven assets perform a little bit better. But let's take a look at the commitment of trader reports. A couple of things that I really want to note from this. First of all is the New Zealand dollar. Okay, so we can see that it says 100% across the board here. That basically means that over a 6-month period, 18-month period, and a 36-month period, that the contracts from the commercials are at the highest levels that they've been throughout those periods of time. Okay, and we can justify that. We can come down to the commercial position in here. I can take off the short and the net. We can see that the contracts at the moment from commercials are at 71,830. The last time we saw contracts that high, we actually have to go back a significant way. Oh, actually, they've never been that high. And looking at the data here, I actually thought we had a very similar positioning into 2019, but that's if you put the net position on. So if I pop the net position on there, which basically takes the longs and short contracts in, you can see that we're at very similar levels that we were back in 2019, where we actually saw this nice little rally before obviously COVID hit, and then changed everything for markets before seeing a kind of a longer rally to the upside. But that was quite an interesting thing just to kind of have a look at then. So commercial positioning on the long side is actually at levels we have never seen before. Now remember, we had a couple of these last year. One of them was CAD. Back in August, we had commercials buying Canadian dollars at levels we hadn't seen for a very, very long time. In fact, I think it was at all-time levels, and we saw that reversal. We've got a very similar position here now with the New Zealand dollar, and what I like about this setup right now is where we are, where price is at this moment in time. So this was the 2022 lows. Okay, prior to that is the 2020 lows. So this is a very significant point on the New Zealand dollar. And I think, you know, if we were to breach this zone, it would be very significant in the market. Whereas if we do get this kind of bounce from here, then this could be a really nice opportunity to be a buyer of the New Zealand dollar. So this is something that I'm very, very much focused in on at the moment. And again, we can kind of, if we go to New Zealand dollar here, we can see that, you know, let's go to a monthly chart, okay, and just kind of look left. You know, we can see that this is a very significant part of the market. You know, looking at 2008, 2009, we kind of bottomed in and towards that 0.5 level. Yeah, and that, you know, we could still reach that type of level, because although the COP gives us a really good idea that a trend could be coming to an end, it doesn't give us the timing of when that's going to end. Okay, we still have to add further confirmations into that. And if the market does continue to fall, then it could still fall down towards the 0.5 handle, which would be a very, very significant level in the markets where you have this kind of severely oversold New Zealand dollar, especially against the likes of the US. But, you know, if we do see this US dollar strength continue, when you look at sort of yields and stuff, then there's a good chance that 0.5 could continue to happen, especially if we do see no growth in China. What I'm looking at, though, is this little zone down here. So this was the 2022 lows. Okay, if we want to kind of narrow that in to be a little bit more specific, it's around that sort of 0.5550 area, and you can see that we had very strong buying coming in and from this area here. So is this the turning point? Is that where we're going to see these sellers that have been selling aggressively from the highs towards 0.63, are they going to start bailing at this point? And that's what I'm looking for, really. Hedge funds are aggressively short right now. Commercials are aggressively long. What we typically see in that is they unwind their positions, especially from a hedge fund perspective. So, you know, I still like the idea that price could continue lower, but also look at the price action there. We are starting to get a little bit of sort of a slowdown in that price action. Now, we have to be careful because these were kind of holiday weeks, right? So there wasn't much trading going on anyway. So you got to be really careful when you kind of consider these two types of candles. But, you know, that does look like a nice little potential reversal, with the market potentially coming back towards the 58. And we could then see continuations of the short. You know, if we think back to dollar CAD, we had that significant move from the, was it the 139s where we sold dollar CAD last year in August. Let's have a quick look. Dollar CAD. Yeah, there we've got our arrows still there. So we were short dollar CAD around the 5th of August. I remember that because it was my birthday. And, you know, we had very significant position in there on the commitment to trader reports. And the market fell, you know, from sort of 139s down to sort of 134s, 135s. So we did get a significant shift. You know, we did get like a 400 pip move to the downside, but then that quickly turned. The market double bottomed, and you can see obviously dollar, you know, aggressive buying came into play, and also we had a weaker Canadian dollar, and the market just shot up to the upside, and now we're trading at the 144s, believe it or not, which, you know, if I actually go to, I don't know if I can go to a quarterly chart, 3-month chart. It's a very significant level as well. We haven't really been past these levels since 2003. When I look at it in this chart, if I actually flip it over to a futures chart, we'll probably be able to go a bit further back. No, it won't give me further back than 2001, 2002. But, you know, if we look at this quarterly move, you know, we're in a kind of a quarterly range, but I don't like that close. Really don't like that close in at these lows there. So maybe CAD's going to go for a little bit more turmoil before we do see a switch around in that particular market. But just heading back to New Zealand dollar and having a little look at the New Zealand dollar futures as well. You know, you can see that we're coming into a very significant level, you know, and when you have a very significant level coming into play, combined with the fact that you've got a commitment to trader report move combined with the strength and weakness suggesting that the New Zealand dollar is starting to gain a little bit of strength, then it makes sense to have a little look at it around these types of areas. Okay. Right, guy, happy new year to you, mate. How do you determine how far the New Zealand US dollar when it reverses? That's the hard part. Okay, that's something you can't really know, is how far a market is going to reverse when it reverses. Okay, you can have an average of what it's done in the past, and then you can work on an average. Seasonals do this really well. If you have a little look at some seasonal analysis, and let's say you picked out VIX futures here for whatever reason, and we click on that performance there, you can actually see down in the left hand side here, you can see that the average loss was minus 13%, with the max loss being minus 19.7%. So you can use those type of figures to say to yourself, okay, well, you know, if the market is going to go against me, that's the max loss that has done in the past. Your average is minus 13, and then on the plus side you've got a similar thing, plus 26%. I don't have the data to back me up about how on average a move does reverse when we do get the setup. That's probably something I should really look into, because every cut signal is different, and sometimes the cut signal doesn't work. So maybe I should go back and have a little look at when it has done, what has been the average return of that move, average drawdown of that move, X, Y, and Z. So maybe I'll have a little look into that if I get a chance to do that. In terms of kind of determining a factor of, you know, looking for the opportunity, first of all, I'd love to see a weekly bullish close here. I think if we get a weekly bullish close, it makes a hell of a difference to the potential for the market to start climbing back higher. If I look at it from a daily chart point of view, what I really would love to see is some kind of higher high, higher low pattern. I think that would, you know, give me a lot of food for thought on a move higher. You got the 50 daily moving average here. If we break that, so let's say we have this cut signal, right, and then the market just kind of consolidates in this zone, and then the 50 moving average just starts creeping down because we're just continuing to consolidate in that area. If we were to break higher, that would be a really good opportunity, I feel, for me to be involved with the New Zealand dollar. But there is other ways that you can get involved with this market. So let's say, you know, we've got the cut signal on Kiwi, but trading it against the US dollar might not be the best thing to do because the dollar is a strong currency. How do we go and trade that against currencies that are weak? You know, that's why I like to look at currency strength and weakness. Aussie Kiwi, for instance, this was a level that we talked about a while ago, where you can see we have resistance, 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 resistance. At the moment, price is kind of being capped towards that resistance, so that could be a nice little area to have a look at. I haven't done anything here on Aussie Kiwi. I don't typically trade this market all that often, but you know, I can see that there's a bit of resistance there. I know that the Australian dollar is a little bit of a weaker currency, but what I would be looking at is Kiwi Swiss. I think this market for me makes a lot of sense. You know, if I look at the monthly chart on this, it's at a significant low. It's at a very significant low. The weekly chart is starting to show a little bit of a pullback. If I go to the daily chart here and look left, this was my sort of demand zone that was looking for prices to kind of reverse from. Now, looking at Kiwi Swiss, we can see that the market's made a lower low, lower high, and we're still kind of working within that area right now. So I need to see a bit of a pullback, and if I do, then maybe, you know, we can get some kind of break into a new high, maybe a break above the 50, and maybe see a significant change in this type of market. But this is a market that I'm really looking at for opportunities right now, because I feel that this market could be one of those ones that turns around, because Swiss franc is getting weaker. That's what the Swiss National Bank wants to see. They want to see a weaker Swiss franc. If we go and take a look at it against the euro, starting to see a little bit of upside here to euro Swiss. So I think the Swiss franc right now is a currency for me that I want to try take advantage of its weakness, and Kiwi could be a very good opportunity to do that, in my opinion, because if we think about it and we think about what is in our favor, right? So remember the method that we want to try and use in this. Okay, so whenever I talk about the method, I'm talking about sort of the WCS method, right? So WCS. So why do you want to be involved with a currency? So when it comes to the New Zealand dollar, we've got the COT. Let's actually do this a little bit better. We've got number one, COT commercials buying at record levels. Okay, I'm gonna put record levels because they're not buying at levels we've ever seen before. Okay, so COT commercials buying at record levels. Number two, what do we have? Well, we have currency strength meter showing reversal. Okay, so there's kind of two factors there that already kind of point out to me that the New Zealand dollar is something to have a little look at. Now, what we can do, let's go to Trading Economics. And we're going to have a little look at what's going on in terms of the New Zealand dollar, right? So we can go to countries and we can come to New Zealand over here. So this is where you can kind of get all your information or important information surrounding sort of the New Zealand dollar, right? So you've got sort of your stock market, your GDP growth rate. Now, GDP growth rate, not looking particularly great, nor does GDP annual growth rate, does not look great at all. Unemployment rate is also climbing, but I don't know whether 4.8% is particularly that bad in New Zealand. Let's have a little look. 4.9. Okay, so 5% can be typically pretty bad in New Zealand. So in that sense, it's not looking particularly healthy. But what I did want to look at was, if we go to, where is it now? If we go, I forgot where they do this, right? Exports. Export prices, imports. I wanted exports per to see. Okay, here we go. Exports by category. We'll open that one up. Okay. So I like to look at what they're exporting, what they're importing as well. So you can see it's like dairy products, eggs, honey. So it's kind of more edible things, because what you can do is then go and have a little look at markets that are sort of to do with that and see how they are sort of performing. Go back here. Let's go to imports by category. So I can see that they import oil. Okay, so mineral fuels, oil. So that's 14% of their economy, which isn't particularly that bad. So really speaking, if we do see oil prices rise, it can be a little bit of a problem for New Zealand, because they are importing that more than they are exporting it. So if we look at oil, there is literally 1.3% that they export. So they are more of an importing nation when it comes to oil. So oil prices moving higher is not necessarily going to be as good for them. So there's still actually a lot of things that are, I would say, problematic in the New Zealand dollar right now, which is very interesting when you actually kind of dig into it. Let's have a little look at the current balance of trade. So this is your imports minus your exports, and typically what you want to see is a country that is more in the blue than they are in the red. What I can see over the past few months is that this is actually starting to increase. That's a fairly positive thing. That means they are exporting more than they're importing, and it's almost like think of it as like a profit and loss sheet for a country. You want to start to see this move higher. If we see a country that has really positive balance of trade, usually that's pretty good for an economy. But who is the biggest country that New Zealand deals with? Well, if you go into exports by country and you open this up, you'll see that China makes up 28% of that, Australia 13%, United States 13%. So really speaking, China needs to pick up. If China picks up, then the flows into New Zealand are going to be very beneficial. So we need to see China picking up. Now, the only way they're going to really do that is by adding stimulus, which they are expected to do. So from I'd say fundamental point of view, it's not looking great. It's not looking great to be a New Zealand dollar buyer. From a flows issue, then we could see some pullback. So what it's making me think right now is that we may see some repositioning. What I mean by that is the market may come into this level here. We may see the bounce, but then we might see a continuation. Very much like what we talked about with dollar CAD. We saw a bit of a reversal back to a point, and then it continued to kind of push lower. Maybe we're going to see a very similar thing with Kiwi. We might see 3 or 4 weeks of a pullback and then a complete sort of rollover and continuation of that move. From looking at I haven't dove into the fundamentals, but by looking at those few sort of key fundamental drivers, I would say that is something to be very aware of right now. Repositioning by the hedge funds, repositioning by your hedgers, and then maybe a continuation of that downside pressure of the New Zealand dollar right now. But when I'm looking at this, there are a couple of things. So fundamentals, I've got rubbish. So we've got kind of two out of 3 really of why you want to be looking at this, but that makes me think that this is more of a short-term reversal. Okay, short-term reversal rather than a long-term move higher. Okay, so I quite like that. Swiss franc, on the other hand. Okay, so Swiss, we don't really have a commitment of trader report signal on the Swiss franc, I don't think. I mean, I'd like to see one, because when you can do the two opposite each other, that's pretty good. Swiss franc, no. They're kind of heading towards being a bit more bullish, but they're not anywhere near it yet. Let's have a quick look at what the hedge funds are doing. Hedge funds have turned, they're starting to short Swiss francs, which is why we're seeing commercials starting to buy again. So, I mean, we've got that 1.1 level. So anything around that level. So it might only be a very short-term sort of pullback or continuation of this downside move here in terms of Swiss futures. But when you've got a strong currency against a weak currency, you can see kind of exponential moves there. So for the Swiss franc, really, we've got hedge funds selling to weak currency. Okay, 3, we know that the SMB have been cutting rates. They might even have to go negative. Okay, so might go negative. I think they're at 0.25% now, but they're running out of ammo to do anything there. But they are starting to get the desired impacts that they wanted. So the SMB wants a weak currency. Okay, they want a weak currency. So this is kind of my feelings around Kiwi Swiss right now. When I'm looking at the Y, the conditions, so this is just the Y, right? So we haven't even got to the conditions or the point of view on the conditions yet. But the Y is that we've got all this information here, right? So we've got New Zealand there, Swissy there, short-term reversal potential to the upside. wants a weak currency, Swiss franc moving lower. Okay, the conditions for that trade, like I said, I don't think they're quite there yet. You've got this high in here that I feel needs to be either breached, maybe even this trend line needs to be breached before we look at any kind of moves there. But you know, this kind of area here looks like a good target to me. So anything up towards kind of 0.54 down to 0.5350. I'd say that looks like a decent area to target if we do start to see significant sort of breakouts. But maybe we could get some kind of, I don't know, maybe even a head and shoulders pattern coming in and around this area. But what I'm going to be looking for is a higher low, you know, on the daily chart. If we can get a higher low on the daily chart, then I feel like this is a good market to have a little look at going forward. Let me just change that to bearish supply. There you go. Sorry, missed a few messages there. Vincent, pound Kiwi and pound Aussie. Yeah, you know, pound Kiwi could be another good one, I feel. You know, if we have a little look at the sort of, if we go all the way up to the monthly time frame, this is a market that is pretty bullish. Again, New Zealand dollar not doing particularly great right now. Weekly chart is to the upside as well, but we're in that. If we have a little think about what phase are we in on a weekly chart, then you can see the market is made. Primary phase, is this now the secondary phase, like this phase here? Okay, and if it is, where can price come to? Well, you've got that 2.18 level just down through here, right? If I just pop a little line on that, let's just turn the color of that to black. There you go. So anything around there could be where price goes before seeing any kind of continuation if this trend was to continue. Now, typically between these secondary phases on a weekly chart, you can get a downward trend, right? So if you look at the daily chart here, market starts to make lower lows and lower highs. Okay, very tight trading range though before that breakout. What have we got here? Well, the market has made a new low. So are we looking for a lower high situation for a potential continuation to the downside there? That's something I'd be very interested in. I hate the price action, but you know, that is something you can consider. I mean, maybe a breakout of these lows. I just don't like the fact that we've got a lot of lows here. Price then broke to the upside, came back within. It's just not looking too healthy. Maybe something like this. Maybe have a little look at the supply zones up towards this area here. Could be something to look for on the 4-hour chart, maybe. Or have a little look to see how the daily chart closes there. Pound Aussie maybe as well. I like the fact that pound Aussie has actually come back within this kind of key area of resistance. I think that's a monthly level of resistance, a little bit higher up, around about that 2.022. So that's actually a very nice sort of come back within that level there. So yeah, I quite like the idea of this one moving a little bit lower as well. But it's very much going to determine on what's going on in terms of China stimulus. I think that's the problem. We've got a lot of potential setups, but nothing that's really kind of solidified yet in terms of these kind of movements that I'm looking for. Right, guy, I'm looking for Kiwi, yen, and pound Swiss. Pound Swissy, interesting one. It's been a bit range bound for a while. Yeah, if we get a breakout to the upside, then maybe. But at the moment, for me, we're kind of stuck at this resistance level. But a breakout higher, we could see price try and break into other levels. Don't mind that one. Kiwi, yen. Yen is a really weird market for me. I think the yen is a little bit mispriced. I want to be a buyer of the Japanese yen. And the main reason why I want to be a buyer of the Japanese yen is because of these 10-year yields. Now, if we have a little look at this weekly chart, now what happened was the Bank of Japan usually, or they do something called, well, they did do something called yield curve control. So they basically intervened when the yields were at certain levels. Now that cap used to be at 0.5%. So if we go left, this was where the cap or the ceiling used to be. So you can see that every time we kind of came into that, you saw that there would be a sell-off, or basically they would buy bonds at that point. and then move the yield down. They then removed that. Okay, so they removed it here, and they said that the next level was 1%. So we got very, very close to 1%. What did they do? They bought bonds. Market moved, or the yield moved lower. It then happened again this year, where we were up at 1%, up at 1.1%. Now this is where they removed that ceiling, and they said 1% was going to be their reference point. We got up towards 1%. What did they do? They intervened in the market. They bought bonds, they sold US dollars, bought Japanese yen. Market moved lower when you look at it on a dollar yen chart. We're now above those levels, which I find very, very interesting. I find that we're above these levels, and this is something I'm not too happy about if you want to be a dollar yen trader. Now, just to kind of show you how this can impact the currency pair, let's go and have a little look at dollar yen and how it correlates with the price movement. Okay, so what I'm going to do is add US dollar yen to compare. I'm going to right click it, and I'm going to pin it to the new scale on the right hand side. I'm just going to pop regular there, regular here. Now, the last time the Bank of Japan intervened was in July of 2024, right? Just in and around this level. Okay, so we can see that from a dollar yen perspective, we're trading at 157.70 right now. That intervention was towards 160. Look at the bond yields and the correlation between the bond yields and the intervention. Now, you may think, oh yeah, that's great. And then you look out and you go, well, the correlation doesn't work that well in 2012. That's because of something called Abenomics. And that was when Abe, the prime minister, basically he wanted to fight the sort of deflation battle, and it went a bit off kilter in between sort of 2012 and 2015, and then it kind of came back, and you can see that we see very similar movements again. We've got very similar movements now, and this is where it concerns me, because obviously we've had intervention, a bit of intervention where we were capping at sort of previous 0.25s, 0.5s. They let it go. Yen got weaker. Yen gets weaker. I don't like this personally. I don't like where this is sitting. So for me, I want to try and see if we're going to get a bit of yen strength. We might even get intervention again. Now, the only thing that can kind of help us with this was those COT reports, because if we go take a look at Japanese yen in the past, when we do get intervention, we typically see a little bit of a signal form. So if we look at net positioning, you know, when we had intervention previously in July, you can see that we had commercials net long at that point, and they were long at levels we haven't seen for a while. Let me zoom back and see when that last sort of move came. So yeah, it was in 2014, where they were at those similar kind of levels. Not really there now. They completely unwound those positions in the market. When you look at it from a sort of net positioning point of view, they've completely unwound those positions. So I would like to have seen maybe, you know, if we do get to this level, how would the commercials react? Would they be buying in sort of mass lumps? But they're not doing that right now. Royce, gotta go. We'll catch up on YouTube. Anything? No worries, Royston. Good to see you. Good to see you in the stream. Hope you have a lovely rest of your day, and I'm sure I'll catch up with you soon. Yeah, Kiwi yen to the long side. Yeah, potentially. I just think yen's worrying me. Yen is worrying me right now. We've been up at these levels on the bond yields. Tupac, can you give any idea for gold? Yeah, let's have a little look then. So I'm long silver right now. I'll show you why in a second. But let me get rid of dollar yen on your chart. So gold was really interesting because, again, we usually kind of see good performance in metals. Yeah, get rid of these. Yep. Through January. and into the end of the year, right? So if I look at this weekly chart, well, let's have a look at the monthly chart first. Exponential move up. Now, I think that it's had a very similar performance to the likes of the S&P and things like that. And I think if we do see a continuation in those markets, like we are really, and I think we will get for the start of the year at least, then I think gold prices can move higher. Whether it'll get up to like past these highs, I don't know, because obviously the market has not been in those situations before. I like the idea of it continuing to move to the upside. If we look at the downside has actually been fairly limited on this. So what I mean by that is when we have seen strong sellers come in, it's been pretty, the market's rebounded fairly quickly. So I don't particularly like to be on the short side of this right now. Looking at the daily chart, we are starting to sort of break higher here and whatnot. So maybe on a short-term side of things, I can see that the sticking point has been around this kind of 2660s, 2662s. I think if we get above those, then that could be your idea for a bit of a move higher. But we had this big sell-off here. Market came back in. We had a big sell-off again. So that kind of put me off any kind of trading of gold recently. Silver, on the other hand, I really like silver. I'm in long down at where's that 4-hour close? I'm in long here. 29.21 is where I took a long position in the market. Pop that on there. So currently up about, my stop loss is not there. My stop loss is a little bit lower. Currently up about 1.5%. My full target is up towards this zone here. Again, why? Well, consolidation is volume, so I'm looking to target that. We have got this sticking point of volume here as well, and the market is finding a bit of trouble here right now, but I do like the opportunity to be a buyer here. Now, if we go take a look at the monthly chart, very bullish silver. The monthly chart is very, very bullish. You can see that we've had that sort of consolidation. This is where we bought at the start of last year. Market rallied, came back in, rallied again, we'll come back in. I like this demand zone as a potential continuation to the upside. What I also like about it is we have a little bit of a cut signal. So if I just put the cuts on here, I need to go to the weekly chart. This is the signal that I'm looking at. I need to go to a futures market. Plot that on. So this is the futures. Now this is a COT scripts index that I actually pinched from a guy called Max Schultz, who is a Commitment to Trader Report trader. He has won he's came very close to winning the Robbins Cup a few times. And full disclosure, this is an indicator that he has created that you can get for free on his website. So I thought I'd check it out, thought I'd try it out. It's not the main reason why I've been bullish silver, but it's nice to see that there's a potential move there. If we go take a look at the actual COT reports in general, you can actually see, if we go silver, we have, is that silver? No, where's silver? Here. Silver has 100% long contracts on a 6-month basis. Okay. So this is why I'm looking to get long in silver. What does that mean? So it means that commercials are buying at levels we haven't seen for the past 6 months. Now, it's not, usually I like to see kind of 100 above the board, across the board, but prices in an upward trend, you're not really going to get 100 across the board there. If it was in a significant downward trend, then yes, but we haven't got that. So on a short side basis, I'm looking at the continuation of the trend here at $30. You can see that's a nice level of support here on this weekly chart. Looking for this continuation, 100% on the commercial side there. So that means that they're buying at levels we haven't seen in the past 6 months. We can see that reflected at this point. So I like the idea of being long in the market. And you can see there's this indicator as well, which went bullish on the week starting the 25th of November. Price since then hasn't really gone anywhere. Okay, we've kind of just floated in this little bit of area here. This is that $30 level. I like the idea of being a buyer at that $30 level, and I'm looking for the market to trade a little bit higher here. Okay, so I like silver. Silver's a good market to have a little look at the start of the year as well. If you have a little look on our seasonal, okay, metals, platinum, silver, here we go. Usually through sort of December to the end of February is usually pretty good for silver prices. So again, I've kind of try and stack things in my favor. I've got a commitment to trade report signal, I've got seasonals as well, and I've also got the conditions, right, from a higher time frame in my favor. So when those all kind of come together, all I did was look at the daily chart. Okay, and what I noticed was price was coming in. Okay, we were in a downward trend, right? Where does that trend change? Well, it actually changes here, but you can see that we're coming double bottom at this point. So what I did was, if you highlight your downward trend, okay, here, go to the 4-hour chart, what you'll notice, okay, is that the market was making lower lows, lower highs, right? So what I did was I placed a trend line resistance. Okay, said to myself, if that trend line breaks, there's a good possibility that price has found support at this area of support, okay, which was that double bottom on the daily chart. So we broke out of that. I went long here, stop losses below the low, market's moved in my favor so far. So my stop loss is at break even now on that position, and I'll see if we can kind of get a little bit higher before I take any kind of profit off the table. But we're at the daily 50 moving average now. Hopefully we can close above that. If we do, I think that's pretty positive for the trade. You know, arguably I'd like to see price kind of come much higher. You know, if we can kind of get back to $33 or even $35, I think that would be good going. Now, silver was actually one of my trades of the year last year. You know, we talked about being long silver at the start of last year down at this $22 level down through there. So that worked out really nicely. Can we get a similar trade this year? Can we see the silver market continue higher? Euro dollar, yeah, euro dollar. So euro had a little bit of a bounce higher, right? We've seen a little bit of dollar weakness coming through to the markets. Very shallow move. Euro dollar at the moment finding support at 1.3. Is that a significant level? Well, kind of. You know, if we look at the 1.3 level, you can see that it was resistance support back here. But when you take a look at what's going on in this market as well, you know, market is in a very much a downward trend there. As you can see, the weekly is in that primary phase. If you look at the daily chart, what's going on? Well, you've got lower lows and lower highs. When does that condition change? Well, either if we break these highs here, or if we can kind of find some kind of breakout of a sort of trend or whatever. So, you know, that to me is something that I want to see happen. I want to see price break through these levels before even considering euro dollar, because the dollar is such a dominant currency right now in terms of strength and weakness. And you know, usually when dollar goes on the rampage against emerging markets, it also flows into the G10. So you can see that happening at the moment. So euro dollar I don't really like as a long just yet, but I don't want to be short either, because we're at such significant points in the market. There's a lot of talk of euro going to parity. That was something I discussed last year, but I don't know whether that trade is still favorable now, considering the fact that there's so many people talking about euro parity now, that I just don't think just don't know if that's going to happen. But we have still got lots of poor data in Europe. So maybe if we do start to see a few wins in terms of data, then yeah, maybe euro can start to rise. But at the moment, I don't like the picture there. What's your short-term price trajectory on gold? Welcome, Just Nothing, by the way. Happy New Year to you. We kind of discussed a little bit, I see it being a bit more bullish, but I'm looking for a breakout above 260s, 2660s before even considering anything. Price action here is a bit messy. Also, do you have any idea of some of the likely movements in the market at the start of Trump's administration? I think we've got to be very careful of this move because the Trump trade for me is priced in. And the reason why is because if we go take a look at the dollar index, when did Trump come into... So this was our commitment to trader report signal down here to be long. Then Trump got into power. Okay, well, he's not in power yet, but he's, as announced as a winner of the presidency. The market has moved, nearly 6% on that, 5.6% move. That's really significant. I just don't know whether the Trump trade would carry on necessarily when it's announced. I just don't know whether markets would be like, almost like buy the rumor, sell the news, right? So buy because Trump has won, sell, get out and kind of take those profits on those potential moves. That's something I'm considering. I don't know whether, and we've got to be really careful about tariffs. This is something that we need to really understand going into 2025. What do the tariffs look like? How are they going to impact US consumers? Is it going to be inflationary? Okay, those are kind of the things that I want to be asking myself going into 2025 and into Trump's administration. One thing that I would be interested in is things like the Russell. If we were to see huge kind of benefits in terms of taxation for sort of mid to low cap companies, so the Russell could be something to look into. But at the same time, if those tariffs make it, if the tariffs increase inflation pressures, then that's going to be bad for the Russell. So I think it's going to be a bit of a rocky year. I think before we can decide anything on what's going to happen with Trump's administration, we need to see him apply tariffs. What rate are those tariffs? What are they being applied to? How is that going to impact US consumers? Is it inflationary? I think that's what we've got to ask ourselves, because I think a lot now will be Trump likes a tariff, but can you actually tariff the US back? And if they do, how's that going to impact things and the prices of things? So yeah, I think that's going to be quite interesting to look at. Oil prices moving higher. I would say energy prices moving higher is inflationary. If you look at an oil chart and compare it to CPI in the US, then typically if oil rises, the CPI rises. That's because of the cost of energy or cost of transport in general would go up. So that's something to look at. Nat gas is starting to unwind a few of those long positions, but it did break out of that major level, 3.4. So we had a COT signal down here for a long. Market rallied exponentially through the sort of holiday period, but the COT signal came around here and it went up 91%. Wow. That was a nice move. But yeah, broke out of this level now. Market continued to rally up. Weekly chart looks ugly, but what was interesting to me was beyond this level, how does that impact markets as well? Because nat gas in Europe is very important. Cost of it going up could also be inflationary in Europe as well. So you could see a big move higher there in nat gas. So yeah, I think you've got to look at some really interesting things with Trump. I think the problem is at the moment it's hard to decide what's going to be tariffed. We could argue that we know a few things. So obviously China could be tariffed, I think, because Trump is buddies with Elon Musk now. The electric vehicles in particular are going to be tariffed quite aggressively. What they have to be very careful of is tariffing them too much that it then makes imports of what they do want. So let's say sort of chips and semiconductors and things like that, anything to do with AI, you know, if we do see a lot of that being imported from the likes of China, then they have to be very careful about. China could then just basically turn around to them and say, well, we're going to tariff everything that you want because you're tariffing us incredibly. So that's also something we've got to take a look at. But it's a great question. It's a great question. And it's something that, you know, we need to analyze going into the end of January, definitely. But we need to kind of wait as well to see how much and what they're gonna tariff. Because, you know, think about dollar CAD. It's talking about 25% tariffs on Canada, but we've just seen Trudeau resign. So is he going to have a more favorable sort of outlook with somebody else? Okay. Dollar Swiss is a market I like. You know, this is a market that I feel could continue to sort of break higher. I'm going to end on this one. You know, we looked at the Swissy futures there. This is a good level for me. This could be where the trend kind of continues. If we look at the weekly chart, we're in that primary phase. Okay, so remember, when you look at your primary and secondary phase, we're in the primary phase. That means there should be an upward trend on the daily chart. Do we have upward trends? Yes. Market's making higher highs, higher lows. We came back into support here. What is the 4 hour doing? It's in a bearish trend. It's potentially breaking into a bullish trend. So I like dollar Swiss as well. Right, guys, I'm going to call it there. We've been going for just over an hour. Thank you to everybody that's joined me today. I can see there's been a lot of new people as well. So appreciate all of you coming. Happy New Year to everybody as well. If you could leave the stream a like and subscribe if you are new, if you learned something new, if you enjoyed some of the way that I break down the markets. Maybe you took a bit of information from this and said, I'm going to go and have a little look at that myself. If you did, hit the thumbs up button. I will catch you on Thursday, same time. And yeah, I will speak to you then. Thank you very much. See you later, guys.